The European Union is often discussed as a political project struggling with economics, or an economic project constrained by politics. But history reveals it as something rarer and more fragile. A deliberate experiment to subordinate power to rules in a continent where power had repeatedly torn itself apart. When I look at the EU, I do not begin with treaties or bureaucracies, but with ruins. Twice in the first half of the 20th century, Europe destroyed itself through industrial war, and the central economic lesson drawn from that catastrophe was stark when national economies are left to compete. Unchecked rivalry escalates into conflict. The European Union was born not from optimism, but from exhaustion and fear, an attempt to make war materially irrational by binding economies so tightly together that separation itself would become unbearably costly. The earliest steps toward integration were explicitly economic, because economics was where trust could be rebuilt without reopening questions of sovereignty too quickly. The European coal and steel community of 1951 did not sound grand, but it was revolutionary. Coal and steel were the inputs of war. By pooling them under shared governance, former enemies made unilateral rearmament structurally difficult. This was not free trade idealism, it was strategic restraint. Economic interdependence was weaponized for peace. The success of this narrow experiment encouraged expansion, not because Europeans suddenly felt united, but because cooperation proved materially beneficial. As integration deepened through the common market, and later the European Economic Community, the logic evolved. Removing trade barriers raised productivity, expanded markets, and accelerated growth, particularly in post-war economies desperate for scale. For countries like Germany, France, Italy, and the Benelux states, integration aligned perfectly with reconstruction and industrial expansion. Growth validated cooperation. Prosperity softened suspicion. Over time, economic coordination began to generate political momentum, though always cautiously, always incrementally. Europe was not becoming a nation, it was becoming a system. What made the European experiment unique was its reliance on rules rather than force. The EU did not centralize power in the way empires had. Instead, it dispersed authority across institutions, treaties, and legal frameworks designed to outlast individual governments. Law replaced coercion as the binding agent. This was unprecedented at scale. Markets were integrated, but fiscal policy remained national. Borders softened, but identities did not dissolve. The system assumed that economic convergence would gradually harmonize interests. This assumption would later be tested severely. The introduction of the euro marked the most ambitious and risky phase of the experiment. A common currency promised efficiency, stability, and symbolic unity. It eliminated exchange rate risk and deepened financial integration. Yet it also revealed a foundational tension: Europe had monetary union without fiscal union. Interest rates converged, but productivity did not. Capital flowed freely from surplus countries to deficit ones, inflating bubbles and masking structural weaknesses. For a time, the euro appeared to work precisely because markets assumed political solidarity would eventually fill institutional gaps. Confidence substituted for completeness. The global financial crisis of 2008 exposed the fragility of this assumption. When capital reversed and sovereign debt crises erupted, the EU faced a test unlike any before. Could a system built on rules respond flexibly to existential stress? The Eurozone crisis was not merely economic, it was moral and political. Northern creditor nations framed discipline as responsibility. Southern debtor nations experienced austerity as punishment. The language of solidarity fractured into narratives of virtue and vice. Trust eroded, not because integration failed technically, but because its underlying social contract had never been fully articulated. Yet the European Union did not collapse, and this endurance itself is historically significant. Faced with crisis, it improvised. New mechanisms were created. Central bank orthodoxy bent. Fiscal taboos weakened. Slowly, painfully, the EU learned that rigidity could be as dangerous as fragmentation. Each crisis pushed integration further, but never cleanly, never decisively. The EU evolved not through grand redesign, but through survival-driven adjustment, accumulating complexity rather than coherence. This is why the European Union remains so difficult to categorize. It is not a federation, yet it is more than an alliance. It is not a state, yet it governs markets larger than most states could manage alone. Its economic experiment lies in this ambiguity. It attempts to balance national democracy with supranational coordination, market efficiency with social protection, and sovereignty with interdependence. Every success deepens integration. Every failure revives skepticism. Progress is real, but never irreversible. From a historical perspective, the EU's greatest achievement may not be growth or stability, but restraint. It has turned a continent once defined by zero-sum competition into one where disputes are fought in courts and councils rather than on battlefields. This achievement, however, is invisible when it works and glaring when it strains. Economic integration raises expectations faster than institutions can satisfy them. When growth slows or inequality widens, the EU becomes an easy target for frustration rooted in national politics, but projected onto a shared system. The European Union's economic experiment is therefore not about efficiency alone. It is about memory. It is an attempt to institutionalize lessons learned at catastrophic cost. The danger is not that the EU is imperfect, but that its imperfections are judged without reference to the history it was designed to prevent. At the same time, history offers no guarantees. Institutions that rely on memory weaken as generations pass. What was once unthinkable becomes abstract. Integration must justify itself anew under conditions very different from those that gave it birth, and it is precisely here, at the intersection of fading historical fear and rising contemporary pressure, that the future of the European Union's economic experiment becomes most uncertain, because the system must now prove that it can deliver not only peace and market access, but resilience, fairness, and shared prosperity in a world far less forgiving than the one that allowed it to emerge. And the experiment enters its most decisive phase, as Europe confronts the question of whether rules alone can sustain unity when trust is strained and economic shocks test the limits of compromise, and the story moves toward that limit, because the European Union's future will be decided not by ideology, but by its ability to absorb stress without unraveling. As the world becomes more volatile, the EU's core dilemma sharpens. It was built to manage gradual convergence, not simultaneous shocks. Financial crises, pandemics, energy disruptions, geopolitical rivalry, and technological competition now arrive layered on top of one another. Each shock tests not only policy capacity, but the willingness of member states to trust shared solutions when national pressures are intense. The pandemic offered a revealing moment. Faced with an external threat, the EU moved beyond its traditional caution. Joint debt issuance, once taboo, became reality. Recovery funds were pooled and redistributed. This was not a philosophical conversion, but a pragmatic response to necessity. History recognizes this pattern. The EU advances most when crisis removes the illusion that national solutions are sufficient. Integration deepens, not through vision, but through survival. Yet such advances also raise expectations that the system may struggle to meet consistently once the immediate danger fades. Economic divergence remains the experiment's most persistent fault line. A single market magnifies differences in productivity, demographics, and fiscal capacity. When growth is strong, these gaps feel manageable. When growth falters, they become politically explosive. The Eurozone's architecture still lacks a permanent mechanism to balance shocks without reigniting moral narratives of blame and virtue. This is not a technical oversight. It reflects unresolved questions about solidarity and sovereignty that cannot be solved by policy alone. From a historical standpoint, the EU's greatest risk is not collapse, but stagnation through paralysis. Systems built on consensus excel at preventing extremes, but struggle to act decisively. As global competition intensifies, Europe must reconcile its preference for stability with the need for adaptation. Innovation policy, defense spending, energy transition, and digital infrastructure all demand scale and speed that challenge existing governance norms. The danger is not that Europe chooses wrongly, but that it chooses too slowly. Yet history also offers reasons for restraint. Europe's incrementalism is not accidental. It is a response to a past where speed and certainty led to disaster. The EU's aversion to radical swings is a feature, not a flaw, as long as it does not harden into inertia. The experiment's success has always rested on its capacity to evolve without rupturing, to bend without breaking. Every crisis has tested this elasticity. So far, it has held. The European Union, viewed through history, is less an answer than a question held open over generations. Can diverse nations bind themselves through law and shared economic interest without dissolving democratic legitimacy? Can prosperity be shared across borders without erasing identity? Can power be constrained without becoming impotent? These are not problems to be solved once, but tensions to be managed continuously. As the EU moves forward, its economic experiment will be judged not against idealized models, but against the alternatives history provides. Fragmentation has a long and painful record in Europe. Centralization has its own. The EU occupies a narrow path between them, sustained by memory, compromise, and a belief often strained that cooperation, however imperfect, is preferable to rivalry. If this reflection on the European Union has deepened your understanding of why it exists and why it struggles, I invite you to subscribe and continue exploring these financial histories with me, and to leave a comment sharing whether you see the EU's future in deeper integration or managed plurality, because history suggests that the most ambitious experiments are rarely completed, but they are still worth attempting when the cost of failure is known too well to ignore.